Hello and welcome. You're watching Market Fatafat on ET Now with me, Snehi Shah. This is the show where we'll be taking you through all the big buzzers in today's trading session and giving you a technical check on some of those as well when our technical expert joins us on board today, and we'll be doing all of this within a minute. So it's a very exciting format. Let's take a look at what the markets are doing before we get started with all the stocks in today's trading session. Nifty holding up very smartly in today's trading session. We're now very close to 23,650 at the day's highest point is where the Nifty is a 1.2% uptick coming in on the Nifty. Sensex also in close tandem, 1.3% uptick over there. India VIX holding very steadily. Nifty Bank continues to be the real outperformer in the market today, a 1.6% uptick coming in on Nifty Bank as well. Shriram Finance, L&T, Adani Ports, BEL, Tata Motors, some of your Nifty gainers. On the flip side, Trent is a stock that's lower by 6.7% right now on the back of Sheen's foray into India successfully once again, and that's what's causing pressure on Trent. You have Britannia, Hero Moto, Tata Consumer, Maruti Suzuki. All of them are trading with cuts of anywhere between 0.5% and 2%. Sectorally though, FMCG continues to be under pressure, 0.4% cut coming in on Nifty FMCG right now. However, it's the day of the banks today because not only private banks, you also have PSU banks that are outperforming the entire market today. Nifty PSU Bank Index up 2%, followed by Nifty Metal, Energy, Pharma, Nifty Bank, IT, Auto, Media, Realty. This is a pecking order of the most to least sectoral gainers in today's trade, and FMCG continues to trade in the red. Some pressure being built on these consumption names. Godrej, Colgate, Radico, ITC, Tata Consumer, Nestle, all of these stocks continue to trade under pressure. But that's the lowdown on what the market breadth is looking like right now. While we are talking about the market breadth, let's quickly also highlight what the broader markets are doing, because Nifty Midcap was inching up solid gains earlier in the day. It continues to do so right now. It's looking good for the Nifty Midcap as well, a 1% gain coming in. The small cap index was underperforming the market, 0.5% uptick on that front as well. So it's in the green, but just slightly lower than where the benchmark indices are trading. But on that note, let's welcome Osho Krishnan on board, Senior Analyst, Technical and Derivative Research at Angel One. And we also have Ansh joining us from our in-house research team. Osho and Ansh, good afternoon to both of you gentlemen, and thanks so much for joining us. Osho, coming to you first, you've picked out Axis Bank for us on the charts. So when I pull up the charts, last 6 months the stock is under some 10-11% pressure. Last 1 year also a single-digit cut coming in on the stock. So there has been a moment of recovery, and then the stock seems to trend lower again. This pattern is something that we've been seeing for quite some time on Axis Bank now. What's the outlook going ahead, and if it starts to gain, could these gains look sustainable on the charts?
Very good afternoon to both of you, and firstly, thank you for having me at the show. Well, now looking at the technical structure of Axis Bank, then we have seen a very steep correction from the zone of 1200 towards the zone of 930, 940 odd levels, which even coincides with the consolidation which was seen in the month of August 2023. So I'm expecting that now the counter have started gaining some traction and coinciding with a very strong support zone of 940 to 950 odd levels. There is a possibility that the counter can see a decent pullback or a recovery towards the zone of 1100, followed by 1200 levels in a medium time frame perspective. So from a risk reward point of view, the counter is poised at a very decent structure, having a very minimal risk at current levels. So I'm expecting that these are the levels where one should start accumulating this counter in a staggered manner for a targets of nearly 1200 from a medium term point of view.
Okay, so accumulate is the call coming in on Axis Bank right now. Let's talk about a Nifty 50 major that's holding up the index very smartly. That's L&T that we're talking about. That stock is up 4%. And Larsen & Toubro has announced that its minerals and metals, which is the M&M business vertical, has bagged a major order to set up a pellet plant and a direct reduction of iron, which is a DRI plant, for their client in the Middle East and North Africa, which is the MENA region. And according to the company, major orders are in the range of anywhere between 5,000 and 7,000 crores. So this order win is also in this range. In a regulatory filing, the company said that these pertain to a major order secured earlier from the client, which is a steel producer in the MENA region, and are also part of the global initiatives towards decarbonization. The scope of work includes design, build, pellet and DRI plants encompassing engineering, supply, erection and construction works, and L&T has been involved in many iron and steel manufacturing plants globally. Another such order win coming in for L&T. It's a significant amount, anywhere between 5 and 7,000 crores. On the back of that, L&T is up almost 4% as we speak. But moving on, let's start revisiting all the earnings candidates, and Tata Chemicals is the one that you've picked out. It's been a weak set of quarter 3 numbers. Give us a lowdown on what the earnings fine print look like for Tata Chemicals.
That's right. So, opposite to the market's direction, we are seeing that the stock is down by over 3%, and this is on the back of weak Q3 numbers, which is on the back of lower soda ash prices across geographies, and also a higher cost in US due to plant production. Also, if we see stock futures, then we are seeing that open interest has spiked by around 25-26%, indicating very strong short build-up. Also, if we see one chart, then the stock seems to have given a decisive breakdown from that key horizontal support zone hitting 2-year low level. So yes, that's the reason why the stock is in focus today.
That's the reason why Tata Chemicals is in focus. While we are talking about the entire chemical space, let's also go across and listen into the management of RT Industries. Soyog Kotesha, the CEO and Executive Director at RT Industries, expects recovery in polymer and aniline markets in Q4 and also adds that pricing pressure in the agro and polymers may continue going ahead. Let's go across and listen in.
Pricing pressure point of view, yes, it does persist, especially from China. But I think we are getting used to it, and building our strategies to tackle that as we serve global market. So we look forward to continued recovery in Q4 as well, and expect a much better performance, especially when it comes to our polymer and energy markets in Q4. Pricing pressure persists, but they have also stabilized at a particular level, right? So I think we have seen sort of downward trends across our products now for quite a few quarters. But if you look at last 2 quarter numbers, the prices have kind of stabilized. And going forward, we see that especially in the two end markets of agro and polymer, where there is significant overcapacity in China, this pricing pressure may persist for a while. So if the tariffs continue to remain where they are announced today, so for these two end segments, both us as well as our customers should see favorable tailwinds. But given the overcapacity that we have in China, the Chinese companies will figure out a way to place that volume somewhere else. Could be Europe, could be Japan, could be India for that matter.
Okay, so that's the word coming in from RT Industry. Let's talk about another earnings candidate, a Nifty 50 major yet again. Power Grid is the one that we are talking about. Because of the consolidated basis, its Q3 numbers have been very weak, but that stock has managed to inch onto the green. So looking good, and the entire market momentum, the positivity of the market has carried this stock also into the green, because it's just a 0.2% uptick coming in on this stock, but it's in the green nonetheless. Overall, it's been a very weak quarter coming in for Q3. Revenue was down 3% at 11,233 crores. The net profit has also seen a slip of 4% on a year-on-year basis, coming in at just 3,862 crores compared to 4,028 crores this time last year. EBITDA too has seen a dip of 7%, and EBITDA margins have shrunk slightly, coming in at 85% compared to 88% this time last year. Now, there's also been muted growth in the transmission segment, and that is something that has hurt the overall Q3 numbers. And there's also been a higher deferred taxes seen in the current quarter. So that is something that's not looking positive for Power Grid, but nonetheless, the market momentum on the positive side has carried this stock to the green, but overall, it's been a weak set of numbers coming in for Power Grid. But on that note, let's shift focus from one Nifty 50 major to another. And Osho, you've picked out Bajaj Finserv for us on the charts. Tell us what the charts of this stock are looking like, because when I pull it up, last 6 months it seems to have done pretty decently for itself. Last 1 year also, it's not moved much from those levels. So steady gains, but it's not doing all that much. So would now be a good time to revisit this stock, and would you recommend this stock as a buy today?
See, overall, there has been a very strong traction in both the Bajaj twin counters. But looking at the broader time frame of Bajaj Finserv, then it has seen a very strong symmetrical triangle breakout on the weekly time frame in the month of August 24, and again has corrected back in the month of December to retest the neckline. And in the last 1 to 2 trading months, there has been some kind of positive buying in this counter from the neckline of the symmetrical triangle that we have seen on the weekly time frame. So I'm expecting now there can be a decent surge in this counter towards the zone of 1900 on a very short-term perspective. But the time it breaches the zone of 1900 decisively, there is a possibility for this counter to firstly retest the zone of 2000 and then to move into uncharted territory. So I'm expecting a very decent move in the coming period, both for short-term and medium-term perspective in Bajaj Finserv.
Okay, that's the outlook on Bajaj Finserv, and looking good for Bajaj Finance as well, coming in from Osho. Ansh, coming to you, Divi's Labs. Now the numbers came yesterday, but today we have a whole host of brokerage opinion coming in on the company's Q3 numbers. Tell us what it is.
That's right. Also, the stock is trading in green today. So first report is from Nuvama, and they have maintained maintained a buy rating on the stock with a target price of 6,830 rupees, which is still around 12% away from its current market price. Now, Nuvama expects a margin benefit in the midterm due to backward integration at Kakinada. Also, they have raised the FY26 estimate by around 3 to 4%. We have one more report from Goldman Sachs, and they have maintained a neutral rating, and they have also raised the FY25 to 28 EPS estimate by 8%. Also, if you see on chart, then the stock seems to have given a good breakout from its downward sloping resistance, and the stock is up by around 9% in last two sessions, touching that 4-week high level today.
So that's the brokerage take coming in on Divi's Labs. Osho, you've picked out Ashok Leyland for us on the charts. Tell us what the charts are looking like right now. Last 6 months, it's seen a downward pressure, roughly 13-14% lower. YTD also, the stock is lower by almost 5-5.5%. So January is also not overall been a good month for this stock. Tell us what's the outlook going ahead, and after this slight bit of a consolidation that we've seen, does this now make Ashok Leyland an attractive pick to look at?
See, overall, Ashok Leyland is placed at a very strong historical support zone. Looking at the weekly time frame, the 89-day exponential moving average has seen a very strong support near, or has seen a very strong buying traction near the zone of, firstly around the zone of 130 in April 23, followed by March 24 around 160, and now around the zone of 200. So I'm expecting, with the historical setup in this counter on the weekly time frame, this level is looking very apt to accumulate this counter. Historically, the 89-day exponential moving average has seen a very strong buying traction for this counter, and I am expecting the same to happen this time also. So around the zone of 200, one should definitely try to accumulate this counter, and I am expecting the targets of nearly 240 in the short-term period, while 280 to 300 from a medium to long-term time frame.
Upside levels to watch out for when it comes to Ashok Leyland. On that note, we'll slip into a very short break on this edition of Market Fatafat, and Osho and Ansh will stay with us into the next segment as well, and we'll be right back. To stay tuned. Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus today, and let's keep it going with the earnings candidates as well, because the next stock that we wish to highlight on the show is KC International. It's been a largely mixed to inline set of numbers coming in, but nonetheless the stock was under pressure. It was trading lower by roughly 1.5-2%, but it's seen a recovery as well, and just very barely in the red right now, and it's a very flat coming in for KC International right now. Revenues were up 7% to 5,349 crores compared to 5,007 crores. If you take a look at the EBITDA, that was also up 21.4% to 374 crores compared to 308 crores. Net profit has seen an uptick of 34% to 130 crores compared to 97 crores this time last year. Margins have also seen a slight bit of an increase coming in at 7% compared to 6.2% on a year-on-year basis. But largely these numbers were mixed to inline, because some metrics have met the street estimates, while some of these operational metrics have missed what the street was expecting. But all in all, it's been very mixed coming in for KC International. On the back of that, the stock is trying to surge into the green, but nonetheless, it's very flat coming in for KC International right now. That's the lowdown on its earnings fine print. But let's move away from that and talk about a technical check on Coromandel International. Osho, this is a stock that you've picked out for us. Last 1 year, very fantastic gains coming in on this stock of roughly 70%. But after that, the stock has not done much. It's been under some sort of a pressure in the last month that went by. Tell us, what's the outlook on the charts going ahead? Can we expect to see these the kind of gains that we saw last year for Coromandel come in again this year?
See, overall, this counter has seen a phenomenal returns in the last year, as you mentioned, but after that, the counter has underwent into a profit booking or time-wise corrective phase. But in the last two trading sessions, there has been a positive technical development in this counter. This counter has seen a sloping trend line breakout with today's movement of approximately higher than 1820, and I am expecting that in the short-term period, 1900, 1920 to be seen as immediate resistance or immediate target, while on the higher end I am expecting a target of nearly 1980 to 2000 from a short-term perspective, and then again we need to review whether it can continue its upward movement or not. But for the short-term period, the counter is looking very promising, and one can definitely accumulate it for higher target of nearly 1900 as first, followed by 1980 as the final target.
next levels to watch out for on Coromandel International. Ansh, coming to you, Midhani or Mishra Dhatu Nigam is the stock that you've picked out for us. Tell us what's the reason you've picked out. I'm sure it's an earnings candidate as well.
That's right. Also, the stock is up by more than 2%. So they have reported their revenue at 238 crore, which is actually down by around 5.6% if we compare from its previous year's quarter, which was at 252 crore. But their net profit, that has given a good jump of almost 100% from that 12.8 crore directly to 25.5 crore. Also, if we talk about EBITDA, then here also we are seeing a good jump of more than 46% from 35 crore to 52 crore. Also, in margin terms, we are seeing very good improvement from 14.2% directly to 22%. Also, if we see the chart of the stock, then we are seeing that stock has been advancing for second consecutive session, and in last 1 month actually stock has given good bounce from the 295 level, and this time it seems to be the third time.
Okay, so that's the reason why Midhani is in focus on the back of the chart check that Ansh gave us, also on the back of its earnings. But on that note, we'll wrap it up on this edition of Market Fatafat. Osho and Ansh, thank you so much for joining us and speaking to us. But with that, it's a wrap on this edition of Market Fatafat. That's all the stocks we wanted to highlight from the team that put this show together. Thanks so much for watching.